Hey everybody, it's Michael Martin. Thanks for being here. As you can see, I'm with one of my best buddies in the world, Sean McLaughlin from All Star Charts, Options Pro, and we're going to talk about volatility. A lot of volatility around here. Get away from me.
It's
Markets are going,
everywhere.
yeah, it's everywhere. It's omnipresent, to coin a phrase. So, Sean, how you been, man? Good to have you back on the show.
Good to be back. I've been doing all right, dealing with a sick kid at home today. But other than that, doing the best we can considering the volatility in the market. And, as traders, we know that when things get volatile, that can affect more than just our trading accounts. So just trying to keep it even keeled as best I can.
My inner voice is saying I have a few questions about that. Let's talk about that. I've said, I don't know if I've invented this, but I've said, without a trading plan, volatility is like brings a moth to the flame. Like it's not the opportunity that you think it is. When vol expands like it has, and markets are making these gigantic moves up and down in an overall directionless kind of way, what's the average, option player to do, right? When volatility pops, premium becomes very expensive. So you could be in a trade, the damn instrument could almost stay still, but the option premium can collapse on you and you can lose money. I had to learn that the hard way. What do you advise, or give some insight as to what to do in a market like this?
For lack of a better instrument to talk about, let's talk about VIX. VIX is kind of the gauge that everybody pays attention to get a
Yeah.
sense of what volatility is doing and where it's at. And
Okay.
there's a whole belief out there that I believe is a little bit erroneously applied that when volatility is high, then we want to be out there selling premium because volatility mean reverts. And
Yeah.
look, it's been proven and it continues to be proven that volatility does in fact mean revert eventually. But it doesn't necessarily mean it's going to mean revert on your time schedule. And if it mean reverts, that doesn't mean it's not going to come with a huge directional move that completely blows up whatever delta neutral credit spread you were trying to put on. So generally speaking, Michael, the way I think about volatility and premium selling when volatility is high is the market is the market's never normal, right? There's no normal, but the market is relatively normal when VIX is under 30. And when VIX is in, the let's say the low 20s to the high 30s, then generally speaking, that's when you're rewarded for selling premium. Because in that case, that's when the market is just, normally pricing in normal high volatility. And yes, it's more likely to mean revert the way you think it should. And when volatility is in the teens, that generally is a good time to be a net buyer of options, or certainly it just means that there's less perceived risks in the market that are going to pull the rug out from whatever direction you're playing. But when VIX gets above 30, like we've seen over the last few weeks, I mean, we're not above it now, but we've been as high as 50. All the general rules go out the window as far
Yeah.
as I'm concerned. And as an options trader, when VIX is above 30, that's a huge red flag, and that's a huge signal to, at least to me, to take a step back and don't force anything here because there's going to be vicious moves in every direction, which is what we've seen. Right, we've seen 5% moves, 10% moves in the S&P and the Qs intraday. I mean, that's ridiculous. Those are ridiculous moves, and it's so easy to get run over in a market like that. Now, look, one of the great things about options, if depending on how you're doing it, is that you can define your risks, and that's great, and that's what keeps you in the game. But in a market where we're getting 5% swings in the indexes on a regular basis intraday, regardless of if you've defined your risks, you're going to get whipsawed out of a lot of trades, and that's frustrating, and it beats up your psyche. And the next most important thing to protecting besides your trading capital is your mental capital. And if you don't have your mental capital in place, then no edge that you have is going to be successfully executed upon if your head's not in the game.
God has said those words. I think so. A couple takeaways. One is if you don't have an edge that you can express, there's no trade. And as largely we're speculators, sitting on your hands is a viable strategy. The problem is with the volatility, and you do the math in your head and you're like, wow, this thing was up so many points. If I just had 1 0 DTE contract, I could have made all this money. But that, to me, not to put a stick in anyone's eye, is a bit of it's an amateurish move, right? It's like you don't have everything lined up, but you can't resist. You can't control yourself. You're acting on impulse. And that can be done if you're ed trader, or you have, decades and decades of experience. You might have seen things. You have a million instances of observations of market behavior, and your instincts can maybe serve you very well. But at the end of the day, for folks who are newer, these might be unprecedented times in terms of a person's experience. And so they might be better off exercising their right to not participate, even though they think there's great opportunity of money. A fool and their money are soon parted, right? So you
Well, you
look
said
at
it earlier about volatility is like traders act like a moth to a flame in volatility.
Yeah.
And there's a reason for that, right? I mean,
Yeah.
as a trader, especially if you're an intraday trader or a short-term trader, generally speaking, you want volatility. That's the field that you play on to make your money. And given the choice between a volatile market and a completely flat market, I think we would all say, well, give me the volatile market. But unfortunately, when volatility gets too out of whack, it can draw the gambler instincts to the market. It could kind of pull out a lot of your base instincts that are not good. You're going to take chances that you might not normally take. You're going to size bigger than you might normally size. You might be trading more emotionally versus systematically. All these things get exposed in a highly volatile tape, and that's why it's very dangerous for a lot of traders, myself included. I get caught up in it still. I've been trading for 26 years, and I still get caught up in it. And I still, at the end of it, I always say, damn it, Sean, you knew better.
Yeah.
But I'm human,
I was just thinking about that on my morning walk. I remember, even and I remember it like it was yesterday. It was the mid 90s, and the story of the memified the story of the day was Wintel, which was a portmanteau of Windows and Intel, because it was the PC market computer, wars. You had Dell and Compaq and all these Hewlett Packard, and they called them the Clone Wars, I think. Exactly. And so I was trading Intel. Intel had warrants, INTCW, at the time that were like half the price. And I was trading Intel, and I thought I could lever it more by owning a bunch of calls. The stock had gone and split. So my 5 lot had become a 10 lot, and I was trading it up until earnings. And you know what's going to happen. It traded right up to the stock traded right up to the strike price. I was on paper worth a lot of money. If they reported like the way NVIDIA's been reporting in the past 2 years, I was set to make a fortune. The number came out and it was kind of good. But what happened was everyone kind of traded it up to the earnings date. I got gammed to the wazoo. Implied volatility, and all of that collapsed. And instead of making 10 times my original investment, I only made about a little more than a double, 220% on the premium. So I had a lot of takeaways, from that about with options, even though it's not my style in futures to kind of scale out of winners. There's times when volatility or gamma pops, especially when you're at the money with gamma, and you have to roll the position. You have to do something to take some money off the table, because if the vol deflates, you could actually be in a winning position and lose money on the options. It's the strangest feeling, but it can absolutely happen.
The crazy thing on that, Michael, is the headline is you doubled your money. Great trade. But that's not the whole story.
Right. It was Steve, if you remember, Steve Martin, when he was first breaking out, did Johnny Carson. He did a record that was very funny called Wild and Crazy Guy. And he was doing part of the record. It's a big live audience, and the other of it seems to be in a nightclub. And he talked about having written books, and he was famous for the gross exaggeration He talked about having written a book, how I turned $1 million in real estate into $25 in cash. And that's kind of what I did on this position, is that I had it and I was just kind of basking, when the trade is so perfect and you're looking at the number and you've got this big 4-digit number with the comma, and it's just like that Farrah Fawcett poster that I had on my wall when I was a kid. I just wanted to sit and look at my greatness on my screen. And that kind of stunned me from doing the smart thing, which would have been to, peel off some, maybe roll the thing forward and do kind of like you do. Our styles are similar, but a little different in how we look at what we look for in deltas, but it's all legitimate.
Michael, you just said something that reminded me of something hilarious, and I had totally forgotten about this. But when you said you wanted to just hang your win on the wall and stare at it, this is a true story, and maybe I'm ashamed to admit this, but when I first started trading in the late '90s, I worked at a prop trading firm, and every day at the end of the trading day, we'd get a little printout of our performance, what our gross was, what the commissions we paid, and what our net was, and it's like a little snapshot. And I got in the habit when I finally turned the corner and I started making money. It took a little while. I mean, it took like a year and a half before I really started making money. But once I started making money, I had this habit, Michael, of whenever I set a new daily high, like a new performance, a new high number for the day, I would bring that sheet home and I would hang it on my refrigerator.
With the gold star.
And it would stay there until I had a new high. Then I would replace it with the new one. And I did that for a while. I don't know when I got out of that habit, but I did that for a while. My wife probably thought it was obnoxious, but I totally forgot about that. You just reminded me of that.
I think there's a difference between doing that and having self-esteem and then peacocking and putting it out on a Discord or a Telegram or Twitter feed or Stock Twits. They're all great places. But it's interesting when I think of early warnings, like when am I going to go into drawdown? I do have something that I discovered in myself. And it was earlier in my career, but it still creeps up every once in a while. And that is, the minute I want to pick up the phone or shoot somebody a text about a really great trade or a setup that I'm in, that's actually the sell signal. Because as soon as I send that text or make that call to not gloat, but maybe humble brag, it's usually the top of the market in terms of the equity. So I stopped doing it and I listen to my intuition, and I tend to roll the options positions then, or certainly adjust my protective stop up.
Michael, that's how you can tell that we've been in this business a long time, because I feel like every trader I know who's been around for more than 15, 20 years, we're all very superstitious about talking about our wins. Every one of us. I've gotten to a point where I don't talk to my wife about my days anymore, because I feel like whenever I have a good day and I tell her about it, then a terrible day is right around the corner. It's happened so many times that we just don't talk about it anymore.
It's good to not bring your work home in certain circumstances, especially with, a family. Folks, this show is hopefully about wisdom bombs more than it is about the magic setup. There are a lot of setups we can certainly talk about, but the main thing here is the inner game, I feel, is the most important part. That's why I tend to focus on it. Most traders are loners. We work by ourselves. There are obviously prop firms where people can congregate and celebrate and be together, share ideas and share energy. But the majority of you watching the show are doing it by yourself and learning not to make stupid mistakes, which I'll raise my hand, I'm still learning to not do, is really the name of the game. You'd be surprised, how much more money you can make because you don't lose, right? It's like jiu-jitsu. We have a competition class where the focus is on defense. Of course, we can make sweeps and submissions and arm bars and knee on belly, joelho na barriga, and all these fun Portuguese expressions. But at the end of the day, we teach people to not give up points. Because why? There's a time constraint on the match. And what you don't want to do is be in bottom position or have some guy in mount and you're down 6-0 and the clock is ticking against you. It's very difficult to play catch-up baseball. So that's why, like I was telling Sean before we got on the call, I had a death in the family, so I hadn't been trading for a long time. And the year leading up to that on my equity stuff in options, I was up like just literally a tick under 14%, which isn't really anything to write home about. I'm not really a stock trader the way I'm a futures trader, but that account had stocks and options. and I found out half my profits had come from options. I had a very good profit factor, but the key thing was that my drawdown was only 1.2%. And when I look back at my trading, in '04, I was a young Turk coming out as an emerging CTA in some outfit. I think it was Autumn Gold had me ranked very high, like number one. I was up, very high, but I had a small drawdown. And the key is if you're trading, is to think about that ratio. Don't think about how much you could make. If you're trying to pin your account for like 100% rate of return, you really have to be thinking about 25 to 50% drawdown. I mean, those numbers kind of go together. Over time, you might be able to bifurcate that and skew it so that you have much more upside relative to your downside. The thing I take home from all that trading is that I only lost 1.2% from any previous high. That helps me sleep at night. It also stops me from forcing trades and not being in. Sean, let's talk a little bit about your process. Like, what kind of stars do you need to see line up? Like, aside from looking at the VIX, which you spoke about earlier, in order to kind of have a stock or an options trade on your radar?
Well, Michael, I got to be honest, as I get further along in this game, it's becoming more and more clear, and this might sound like a cliche, but it's becoming more and more clear that my success is not determined by my strategy.
Mm-hmm. Yeah.
My success is determined by my headspace and where I'm at and how willing I am to execute upon my edge. We mentioned that a little bit earlier when we were talking about VIX. When VIX is too high, it's hard to execute on an edge because you're on tilt, or you're at risk at being on tilt.
Yes.
And so these days, Michael, honestly, I'm focusing less on, the X's and O's of trading and more on the A's and B's of what's going on up here.
Yeah.
Because that is really where my alpha is going to be generated. And look, I might sound like an idiot here on your podcast right now, Michael, but I don't have it figured out yet. I'm still trying to figure it out. Look, I'm in therapy. I'm dealing with this stuff, and this stuff is hard. And if you're not in the right headspace, man, you could have the best edge strategy in the world. You're just not gonna make money, or you're not gonna make the kind of money that you should be making. And so, yeah, I mean, we could talk strategies if you want, Michael, but I just don't feel like that's where the alpha is, at least for me anymore.
Sure. I was just thinking more like I get a lot of emails from folks who either see the show or they come by the site or they've listened, because I give away the audiobook version of my book. I figure might as well help people. It's cost me over $1 million, but that karma is already out there kind of coming back to me. Like, that's the whole point of it. It's not like how much money could I have made from selling audiobooks for the Inner Voice of Trading. I'd rather give it away and help people who am never going to meet, right? So that karma is invaluable to me in the way my mind works, because I don't need any of those people to give me money or to pay me back. I know that abundance is going to come. I don't know when, I don't know where, and I don't know from whom, but I know it's on its way. I've lived my life that way, and I've been able to achieve a lot of good things. So I'm kind of in that same Yoda space where it's like, when do you know that it's a good time to put on a trade? It's kind of like the old definition of porn. I can't define it. I know what it is when I see it. And I kind of go on instincts anymore. Of course, I have very strict risk management, and I still deploy incremental exposure. But I was thinking more like, if the VIX is at 30, you're inclined to sell. And if implied volatility on an instrument is 125, like, I know you like the 25 delta space. I'm more of a 50 delta, which brings other types of risks that we've talked about over pizza and beers and coffee and over the years. There's more than one way to kind of skin a cat.
Well, look, I'm of the mind that regardless of what your time frame is, whether you're a day trader, a swing trader, or a long-term investor, if you are putting yourself in positions that cause you to sit at your computer screen and start sweating out your pits, or start getting anxious, or getting nervous, or getting agitated, or anything that is invoking negative emotions or bodily feelings, if you're consistently putting yourself in those types of trades, you're doing it wrong. I'm sorry. it might be the greatest strategy in the world, but if you are in a negative space, whether mentally or physically, because of the strategy you're in, you are not going to achieve the results you want. I'll fight you to the death on that one. You have to be. I mean, I don't want to sound like I'm a Zen monk. I'm certainly not, but I mean that's what we all really need to aspire to be if we want to be successful in this business. And Michael, it's not just about trading, right? Like we've got to have all the other shit in our life, kind of work, rowing in the same direction, right? We got to have
Yes.
strong relationships with our family and our friends. We have to have other activities and hobbies that keep us grounded. We have to have our finances in order. We have to have, things to look forward to, vacations planned, all these things, man. You can't quantify it, but all this stuff is important. And this is stuff I ignored for so long in my career. I mean, it's only in the last few years where I'm realizing that no, man, this stuff matters and it matters big time.
Again, it's wisdom bombs. Trading is a subset really of our lives, right? And I tend to think that as leopards don't change their spots, we tend to trade our personalities. And so you have certain people who want to put their head in the sand and not deal with stuff. I believe that that's somehow going to show up in their trading, right? It's stuff that I learned, from my mentors early on. Certainly learned from the Incline Village Trading Tribe, and how my feelings affect my behavior. Because behavior predicts where you end up in life. You don't want to honor your stops? Okay, sooner or later you're going to take the mother of all losses, and you'll learn why people do that. Jumping the gun on a trade because only 3 of the 5 things that you need to line up showed up, and you jumped the gun and put the trade on hoping the other 2 were going to show up after the fact. It's a quick way to lose money. So again, I think for traders, you can improve your P&L by not doing stupid things. And I'm not saying you're stupid. Anyone listening is stupid. I'm saying that if you do things that are unwise, they typically don't pay you. Now, I do agree that you have to try to experiment with things to really learn your craft, and you kind of have to do that with real money. But that's a different type of a trade. That's where you're risking, say, 0.1% of your capital. It's not your main go-to strategy, right? So especially in this type of market, don't cut corners, because it'll end up costing you. And then it's a loop, because then it affects your personal life. It affects your relationship. It makes you aggravated. Then how does the aggravation play out inside your family or with your friends? What do? Do you go on tilt and revenge trade? Like, it just brings this cascade of things, and you're not in control of what I call your emotional model. We all have trading models that we follow for risk management, entries, exits, position sizing, and this and that, money management techniques. But there's also an emotional model. And some of it's conscious and some of it may be subconscious. And you and I have talked about that too, like meditation and going on long walks and other things that we can use to kind of get self-awareness. To me, if you don't know who you are as a human being, it almost doesn't matter what you know.
No, absolutely. I spoke to a trader friend of mine just last week. We had he and I were just catching up. We hadn't talked in a while, and he's been a trader almost as long as me. And boy, he said something to me that just knocked my socks off. He said, Sean, I've been trading for 20 years or whatever it was. And he's like, in the last year or so, he, in his words, he finally figured out who he is. He figured out who he is, why he's here on this earth, and what he's meant to do with his life. And, wonderful. And, he got there in ways that it might be a little bit unconventional. Doesn't matter how he got there, but he got there. And he said to me, he said, Sean, as soon as that happened, my trading went from here to here. Like, I elevated in a way I've never elevated. He's like, I'm not really doing anything different, but the fact that I have discovered who I am in all realms of my life, he's like, that just unlocked everything. And I'm a completely new trader. Again, not really doing anything different than he'd been doing the previous 20 years, but there's something that clicked. And I mean, he told me that, and I believe him, and he meant it. And that has really stuck with me. And it's something I'm trying to do. I mean, look, I'm going to be 50 this summer, Michael. I know. I only look like I'm 25. I know. But I'm going to be 50 this summer, and I'm still, trying to figure out who I am. And I think I'm getting closer, and I'm definitely working towards it. I'm very consciously working towards it, trying to answer these life questions. And I'm optimistic that as I get closer to that, I think that'll manifest in a lot of places, trading included.
It will. It's not like I'm on the same path. And the thing is like we look at these milestones of hitting 30, 40, 50. It seems to be a bigger issue for women than for men. At least that's my perception. But because ageism affects people differently. But I think we're always on like the quest, like what's my purpose in life? You know, why am I here? And how does that role evolve over time? When you're newer and you're starting out, you think of Maslow's hierarchy and wanting to be self-actualized and having purpose and this and that. And trading can fulfill a lot of things. It's a great personal challenge. It's also very competitive. There's financial rewards or not. And then after a while, after you start making money, the accumulation of more money, it's like decreasing returns, right? Marginal returns over time. You have your first beer and on a hot day, it's really great on the utility scale, but your second and third or your fourth, I'm not a drinker, so I don't do that anymore. But your need for beer after the fifth one is not zero. So after you've accumulated a bunch of money, what's the motivating factor to trade every day? Is it the personal challenge? Is it still the self-actualization? Or how do you repurpose the money? Because the money could have different qualities of money. When you're broke, you have one big money problem, and that is you don't have any. When you accumulate money, there's legal and tax things, right? And then there's, like, for me now, the purpose is philanthropy and eleemosynary kind of things. Like, who can I help? What kind of things do I want to support? Not politics or other things like that, but what things are important to me? How can I make investments or put some wind in other people's sails? Maybe venture capital or even just 501c kind of stuff, and help the world. Put more karma out. You know what I'm
Right.
saying?
And that speaks to your desire to be more than just a trader. I've become aware of this also in recent years, that for most of my adult life, I have, for better or for worse, identified myself as a trader. You know how, like, Michael, you go to cocktail parties and you go to family events and you meet people that you've never met before. And the first question they always ask you is, what do you do for a living? And, you say, I'm a trader. And
Yeah.
I don't know, for me, Michael, and I've only just realized this recently, is that having identified myself as a trader and not just as someone who trades, like internalizing that label, has put me in a space where my emotion and my psyche is so much more vulnerable to the ups and downs of my P&L. Because when I hold myself out as a trader and I'm not doing well, then what does that mean about me, Michael? That means I'm a shithole. I'm a shitty person. I'm terrible. I'm not good. And that is a dangerous, dangerous slope. And I've lived that slope for a long time. And so in recent years, I'm mindful of the fact that Sean, trading is just something you do. It's not who you are. And I'm trying to lift that weight from myself, because I think that there's a key there to unlocking some psychological, I don't know, creativity once I can fully remove myself from that label.
Language has power. It absolutely has power. The things that we say to ourselves, our self-talk, I call it self-talk, is very, very powerful. And that's one of the reasons why, I get up at 5, because the markets are New York and Chicago time. But then around 7 o'clock, 8 o'clock my time, I go out and clear my head already and go for a long walk, somewhere between 2 and 4 miles.
Hmm.
And I'm able to sometimes roll phone calls. I can do anything I could think. The most important part of my day is the time away from the screen. My orders are already on the floor. I'm waiting for the market to come to me. I don't chase women in dating. Why would I do it in stocks or commodities, right? Like it's all that energy, right? It's like, if it's meant to be, everything's going to come together. My strategy and I have to have chemistry, right? And so
Yeah, I mean, I'm like you, Michael. I'm just an hour ahead of you. I'm in the mountain time zone, and so the market does open relatively early here as well. And for me, I'll put my order. I'll work like the first hour the market's open. I've got trades I got to put on or positions I need to manage. And once I get that initial thrust out of the way, about an hour or so after the market opens, I don't do it every day, but I like to get out and take my dog for a walk. And yeah, it works out to be a 2 to 3 mile walk, generally speaking, depending on where we go. And that is so important. I mentioned I started trading in the late '90s at a prop firm, and from I was in the East Coast that time, so I was at my desk no later than 9 o'clock in the morning, and I was there till 4:30 or 5 every day. Only leaving my desk to go to the bathroom, take a potty break, or grab a sandwich and get back to my desk and eat it at my desk. I mean, I was there all the time, and I can't do that anymore. Physically, I can't do that. My body needs to move. As we get older, we need to stretch out a little bit more.
Yeah.
And just besides the body, like our brains just need the break, man. And I'm very fortunate. I live in Colorado. I live near a lot of nature and open space, and I could get out and clear my head pretty easily, easier than some people. I know, I get it, but
Yes.
I try to take advantage of that as much as I can, because I mean, I'm a regular meditator. I'm not an everyday meditator, but I'm a regular one. But truly, the best meditation I get is on my feet, walking around outside in a forest or amongst the trees, or in the mountains. That's my best meditation.
Yeah, I mean, there's a million ways to meditate. There's a formal way. There's a sit, lotus position. You can have a zafu pillow, all of this and that. But sometimes I'll lose myself in writing or in painting and just freeing my mind from the markets and kind of decompressing, right? And then, yes, I will play with language. If people ask me what I do, we're typically speaking with, other people who are super intelligent and understand finance, right? They're CIOs of insurance companies, endowments, foundations, single and multifamily offices, sovereign funds. Like, these are people who I just assume know more than me. So I don't try to fight them on language, because, again, the CFA types, trading is about managing and harnessing forces of buying and selling. And so when people ask me those questions at cocktail parties, it depends on the vibe and where my head's at and who I'm speaking with. But I'll say something like, I invest people's money, or I manage risks for, big entities, endowments or what have you in the markets. I don't really talk about trading or specifics in that regard. Because those people are also in a different mindset. When you're newer, you're in the accumulation phase of your wealth in many ways. And you're probably very, very willing to exchange your time for money. I'm not in that space anymore. I do not want to sit in front of the computer looking at charts all day. And the reason that is because nothing really productive comes of it. I can program the computer to screen things for me, right, and delegate that to a computer program that I don't even have to pay. I have to pay for it, software as a service. But I want to delegate things because my most valuable thing in my life is time. Like, I want to enjoy my time with the money that I've accumulated. When you're younger and you're trying to accumulate money, you'll do almost anything to get it. So your role as a trader changes over time. Like, you're going to evolve over time. So my self-talk, yes, is very more like, okay, if this thing works out, who can I help? It's never really about me. I just think of myself as the gatekeeper. If I can bring abundance to me, here's the impact that I could make in the world. I don't really need any more money. I can stop working and not work for the rest of my life and be absolutely fine. I have a very humble life. If you saw my overhead, you'd be like, dude, you got to get out more. I'm just not built that way. I don't accumulate shit. I don't care about cars. I don't need that stuff. I have a humble little life. And that's the way I like it. I like to keep it simple. Start accumulating things or going out and hanging out with fast people in fast places, and you get those kinds of results. And I don't need that bullshit in my life right now, to be honest.
Well, you hit on something there, Michael. Going back a little bit, you're talking about hanging around smart people and seeing and interacting with really smart people. And there's a I don't want to call it a gotcha, but there's a thing that many traders, a trap that they fall into, that they feel like they have to be the smartest person in the room because being the smartest person means that they're going to be profitable. And when they're profitable, that means they're smart. Those two things do not equal each other. Being profitable does not make you smart. And I've basically given up the notion of being in a room full of other financial people and given up the idea that I'm the smartest guy in the room. In fact, I would go the whole other way. I'm probably the least smart guy in the room. That's the attitude that I really have. But the one thing that I am smarter about than anybody else in that room, whatever room I'm in, is I know more about me than anybody else does.
Yeah.
And until we know about us, until we know about ourselves, and I mentioned this earlier, until we know who we are and what we stand for and what we're all about and why we're here, that's the key. That's the key to success in trading and in anything. And I'm a bigger believer of that today than I've ever been. And I'm continuing the trend in that direction. Trading strategies, yeah, great. Everyone's got to, or at least everybody on the internet wants to sell you a winning trading strategy. Great. And those might be winning trading strategies, but until you have the mindset of a winner, whatever that is for you, you're just not going to make it.
Certainly going to impede progress because you're kind of reaching for the wrong things. I've said before, as a guy who's done some consulting and some teaching, the reason I don't sell a box of shit to people about how to trade is that I have no idea if there's compatibility between the people and what it is that I know. So I find that it's kind of unethical, even though, yeah, no one's holding a gun to their head. It's kind of unethical to say that if you put tab A into slot B, you're going to get these results. I know I did, but that's because this process is congruent with who I am as a person, and it works for my makeup and the amount of effort that I'm willing to put in, which ebbs and flows over time. I've always said that the best teacher of trading is you're actually doing it. Why? Well, because it's about compatibility. You can't find compatibility in a book. That's ideology, and you can't ideate yourself to success. You can't ideate yourself into wealth. It's thoughts, feelings, and actions. Actions are behavior, and behavior predicts where you end up in life. So the doing part, which is exactly what guys typically don't want to feel. They're like, well, I'm not ready. I got to learn more stuff, and I got to do this and that. And I'm like, no, you got to jump in. Well, I don't have a plan. Well, you have step number one. Do step number one. You figure out step number two while you're there. Do you know how much you're willing to lose on a trade? Yes. Okay, there you can go. You can calculate position size and where you want to put your protective stop. Or in your case, you buy X amount of deltas with a fixed amount and you let it ride. And if it goes against you, big whoop, because you know what your capital outlay is. You can't lose any more money for the debits that you have in your account. Like that's an absolute great way to go about it. I wish I put more attention to that when I started. My account was really too small and options were just way too complicated for the resources that I had at that time. Of course, there wasn't any internet, but let's talk about leverage too, if you don't mind. Like options allow people to, underlever and overlever their accounts. How do you advise like people who want to get into options or even in this type of an environment when you talk about leverage, because it kind of goes with position sizing? What do you think about that?
Well, when it comes to leverage, I'm fairly conservative, Michael. If there's any criticism of the type of trader that I am, it's that I'm too conservative, and that's okay because that's what keeps me alive in times of turbulence. So yes, options give you the ability to leverage into a play that you have strong conviction in, right? Let's say you're bullish on, I don't know, I'm just picking a name out of a hat, Apple. Okay, you like Apple. Well, you can go and buy 1,000 shares of Apple and that consumes all of your buying power. That's fine. If you have a strong belief that that's a viable trade, then go for it. Or you could take all of your capital and go buy some out of the money calls. And if you really get it right, you're going to absolutely crush it. You can do that. Of course, leverage is a double-sided coin or a double-sided knife, right? I mean, when it cuts the other way, it cuts hard, it cuts deep, and it cuts fast. So yes, leverage is a sometimes attractive opponent or a component to some people, like a moth to the flame, like we talked about before. But leverage is not the main appeal to me for options, Michael. For me, the main appeal for options is the ability to define my risks. Now, that doesn't mean I define my risks in every trade. I do sell naked puts every once in a while, or a strangle where I'm short naked calls and naked puts together. But the vast majority of my trades are risk defined, meaning I know the worst case scenario going in, and I size my position such that if the worst case does come to pass, it's just a flesh wound, right? I can
Yeah.
come back from a 2% portfolio loss, right? If I and that's on the large size for me. Typically, I want my positions to be no more than 1% of my equity. Sometimes I go a little bit bigger than that. 2% is generally my upper limit. That's beyond that, that's when I start getting uncomfortable. And yeah, when I get the big wins, sometimes I'm like, oh man, I wish I was double that size. I really would have made a difference in my portfolio for the year. But the times that I lose, I'm very happy that I kept those positions small, because that's what keeps me in the game.
Yeah, again, what you don't lose, you don't have to win back. There's such a benefit with options, and I've been, looking at options a lot in these markets, again, because of the vol, and, largely being a buyer of puts and calls, direction, meaning I'm a directional trader. With the volatility being what it is, I've absolutely been looking at, all different types of structures, from butterflies, condors, ratio spreads, back spreads, that kind of stuff, because you can carve out the right risk profile. The trickier part when volatilities expand is like, if you're doing spreads, all the money that you can make and lose is obviously between the two strike prices. And with volatilities having expanded, it's difficult to find situations where it's not very lopsided, where you would need a hyper gigantic number in terms of accuracy, to make money, right? Where you have a $10 spread and you have a $5 or a $6 debit, and you have $4 of upside. I tend to look for better asymmetric situations when I put on trades. So it's been a little challenging, but you can rely on the technology. There's tools out there that can help you see things. But what Sean and I are talking about is that people change, also the environment changes, and so it's not if you're a one-trick pony, you have to exercise patience and learn to enjoy the feelings that you have to feel when you have to be patient. Because if you try to force something, it's just like a relationship. If there's no vibe, it's awfully hard to get out of the friend zone, if you know what I'm saying. So sometimes you just have to sit on your hands.
With option structures that you're talking about in a very volatile tape, yeah, you might have a defined zone in which you're theoretically gonna make money. But if the market's ripping 5% this way, then 5% that way, left and right, it's like trying to thread a needle to get that trade to work. And so what ends up happening is that you're kind of forced into holding these spreads, up to or into expiration, and just hoping that the strike gets pinned in your profit zone. But when you do that, then you're introducing tremendous gamma risk in your trades, right? Your P&L is just going to be swinging all over the place, and that is no way to help you sleep at night, and that's no way to help keep your emotions in check. So yeah, volatile tapes with a VIX above 30 is challenging for that reason and many more.
So I like to say that there's really two payoffs when you're a trader. There's the emotional and the psychological, and then there's also the P&L part, the financial. And so I think if you need to jumpstart your trading, look at your behavior and see like what needs are you serving by exhibiting certain behavior, right? Because you think you want to put on trades to make money, but it's like the story where I said I had a guy write me and say, 3 of the 5 things that he needed to show up were in alignment. The other 2 were missing. Why would you put the trade on if 2 critical things were missing? It's like planning a big getaway weekend with your honey and going out with a quarter tank of gas. Like, you have to have all the stars line up and have the sensibility that if they aren't there and they don't line up, then there's really no trade. Because if you go and put the trade on in those circumstances, it's not necessarily about the money. It's that you can't sit still. And you're solving probably, or not solving, but you're certainly feeding an emotional need to kind of always be active. And whoever said that you kind of always have to keep your money moving, this is not the truth. this is some kind of gimmick. What you don't lose in the market, you don't have to earn back. So in those circumstances, you have the right, and you should exercise the right to not participate and not force trades that aren't there because you feel like we'll just see what happens. Let's see what happens is not a trading strategy,
Yeah.
at all.
Michael, this dovetails on a lot of things that we've touched upon so far in this conversation. But you just reminded me of a story when you mentioned, going out on a date, road trip with a quarter tank of gas. Let me tell you a little funny anecdote that just happened to me recently, about a month ago, that really highlights the need for proper planning and awareness. Okay, and this relates to trading, I promise. But I was in California about a month ago, Northern California. I was in near San Francisco. I was in the Santa Cruz Mountains, and I had a plan. I was in Santa Cruz Mountains for a few days, and then the next part of my plan was I was going to rent a car at the San Francisco airport and drive 5 miles north to the Redwood Forest in Northern California, near the Oregon border. To me, that's my favorite place in the world. That's my happy zone. That's my Zen meditation zone. I was going to go for a solo hike, a full day hike up there, and then fly home out of the Eureka Airport in Northern California. Anyway, so I pick up my rental car at San Francisco Airport. Pick it up. It's a great car. It's a car I've never driven before. It was a Subaru something. I don't even know what the hell it was. It was like a mini SUV. It was great car. I pick it up. I get on my drive. I drive through San Francisco. I cross the Golden Gate Bridge. Everything's beautiful. I eventually get to the coast, and I'm driving up the coast all the way for the next 5 hours. That's my plan. And it's a beautiful drive. The weather's amazing. And I'm about 3 hours into my ride, and I look at the gas tank in the car, and I'm down to about a quarter tank. You mentioned quarter tank, so this is what triggered this. I'm down to about a quarter tank. I should probably, pull over at the next gas station and get some gas. So, maybe another 15 minutes down the road, I finally come across a little gas station in the middle of nowhere. I pull into the gas station, park the car, turn the car off, and I'm looking to put the gas in the hole for the, whatever you call it, the gas nozzle. Well, Michael, I couldn't find the gas nozzle. I'm like, where the hell do you put gas in this car? I couldn't figure it out. I walk around it twice. There's another guy parked next to me on the other thing, looking at me like I'm some weirdo. I'm like, where do you put gas in this car? Well, guess what, Michael? Turns out, I didn't know this, but I had rented an electric car, an all-electric car. I thought it was a hybrid. For some reason, I thought it was a hybrid, a gas-electric combo. No, it was an all-electric car, fully electric. And at that moment, I realized, oh shit, I'm in the middle of nowhere. My battery's got maybe 60 miles left in it, and there's no cell signal where I'm at. So I can't go online and figure out where the nearest electric charger is. Anyway, fast forward to the happy ending is that with about 15 miles left in my charge, I did find a place to charge my car, and it was a relatively fast charge. I can get it charged in under an hour, and there was a little Irish bar right next to it where I can get a sandwich while I waited. So it all worked out, luckily, but by the skin of my teeth, Michael. And it just brings me back to, when you're planning, you gotta figure things out. You gotta plan for the worst case scenario. In the case the worst case scenario happens, you can come back from that. And for me in this situation, the worst case scenario was I'm going to be stranded in the middle of nowhere with no cell signal. Maybe I'd have a beautiful view of the ocean where I might have been, but I'm going to be stranded in the middle of nowhere where I don't know anybody in a car that I don't even know how it works. And boy, I got lucky there, Michael, and that's no way to go about planning. That's no way to go about trading. You have to account for the worst case scenario and make it so that you can come back from that because, that's the name of this game. We've been in this game for 20 years or more, you and I, and it's like we're going to screw up a lot. We're going to have bad trade ideas. We're going to have bad market events that come out of nowhere and sideline us or just we didn't expect it. That's going to happen. But we have to make sure that those things don't take us out of the game because if you're taken out of the game, there's no coming back, right? And anyway, sorry for that little anecdote, that little tangent, but it just happened to me recently and it's still fresh in my mind.
No, preparedness is key, right? I've said before on the show, the victorious warrior first wins and then seeks battle, So to me, this is like the moral of the story. Don't trade zero DT options, what I'm saying? Give yourself time. Give yourself opportunity. You don't want to, try to figure out what to do with 15 minutes left in the trading day. Anyway, Sean, let's do this more often. I love chatting with you. You're an old friend, good friend, and I love the wisdom that you bring to, the show. And I'll look forward to seeing you in New Orleans, and I'd love to have you back on.
Oh, we're gonna have some great meals in New Orleans next month. I can't wait.
I'm gonna eat 45 beignets. It's gonna be crazy.
All right, Michael, thanks for having me on, and happy to come back anytime.
All right, I'll put the link for your newsletter in the description if you'd like.
Sweet. Yeah, I got a free little options newsletter I write most days, not every day, but most days, and sharing things that I'm seeing in the options market. We talk about, we do postmortems on trades. We do some educational stuff, really kind of whatever's on my mind, and it's totally free. And if you like it, great.
Awesome. Thank you very much, my man.
Thanks, Michael.